How's it going, everybody? I hope you and your investments are doing well. It's Steve coming at you with a live buy and a quick review of the Canadian dividend stock Pizza Pizza, ticker symbol PZA. If you are new to my channel, I'm just an average guy in Ontario building up some passive income through the investment of Canadian dividend stocks. I'm using Wealthsimple Trade as my broker, and you'll definitely know why by the end of the video. In addition to the Wealthsimple Trade interface, I keep track of all my stocks in a spreadsheet so I can quickly review stats at a glance. What I'll point out first is how much dividends I currently receive on average, which is roughly $16 or $195 annually. The plan is to reinvest this passive income over the next 20 years, but eventually this money will go to offset future expenses such as groceries, or the example I like to use the most, streaming services like Netflix or Disney Plus. Speaking of which, did anybody check out Loki yet? I'll be curious if there's any other Marvel fans out there, so let me know in the comments what your favorite movie is. Alright, now on to the live buy. Here we are in my Wealthsimple Trade account. We're going to go into my tax-free savings account. We're going to buy the four Pizza Pizza stocks that I tried to buy previously, but I did a limit buy, it didn't go through. So now we're going to buy them now because the stock has gone down to the price that I paid before. Let's grab the additional four. I will do a market buy this time. Let's just get the stocks and get this over with. So buy, next, continue, place order. Done. So while that is going through, I thought I'd just take a quick moment and show you the portfolio overall for my tax-free savings account. This is the main one that I'm reviewing and just keeping up to date. Right now we're 3% all time up. I'm up $144. So same thing for the year since I started in February, the same numbers there. So for 3 months, up 3% again. 1 month, hey, 4%, $200 up. That's awesome. 1 month that we're at kind of the break-even point. And for the day, again, pretty much a break-even, 0%. So, and then when I go back to my dashboard, I am like $16.31 monthly income. And if I quickly show you the personal account, these stocks are just, I'm down 39%. So I'm just waiting again for these ones to bounce back up at some point. Hold them, sell them, we'll see. But I'm definitely not selling them at a loss. Let's not get emotional. Just get rid of them when the time is right. So that concludes just the sale of the purchase of some Pizza stock. And now let's talk about why I decided to purchase these stocks in the first place. Before I begin, I just want to say that this video is for entertainment purposes only. This is not financial advice. I am not a financial advisor. I am someone who can understand charts and I can look up financial statements and put together pieces of information and try and paint a bigger picture. So with that said, right now we're looking at I believe this is the 1-year view of Pizza Pizza. I've got 3 arrows there pointing out when there was some fluctuations. This is when some quarterly reports came out. But what I think is very, very interesting to look at before we get into that is the 5-year chart, which shows that back in the 2016, 2017 mark, Pizza Pizza was at a high of, I believe it was $18 a share before it started to plummet down to, basically kind of a bit of a plateau where it has been the last little while, especially within the pandemic, and then it's been slowly rising up. So what was happening in 2017 and 2018? Well, in that first year, 2017, the province of Alberta was going through one of their worst recessions in 50 years, which impacted the Pizza 73 brand stores out in that area, as well as it was a very, very wet summer. I can't remember if this was across the whole country or specific to Ontario or Alberta, but that really impacted their event sales, so kind of outdoor venue type opportunities where Pizza Pizza would be setting up shop. So that saw a major decline in that time period. But 2018 was where it really, really, really dropped. Yeah, 3 relays there. What happened there was a significant change to the minimum wage, primarily in Ontario. You can see that's pretty much right where people started selling off. It was going into effect in 2018, but obviously I'm assuming it was announced prior to that, where the stock just dropped. Yeah, the minimum wage in Ontario went from $11.70 to $14. So that was a significant change to all retail, their expenses, paying their employees, as well as Pizza indicated in their financial reports that they had to then change their pricing structure slightly. So they had to increase their prices to compensate for this. And there just wasn't as much appetite for this, despite all their marketing efforts to kind of contradict, or not contradict, but just to counteract those price increases. So it just did not work out for them. After that's happened, though, the stock did start to rebound, and it's obviously been around this nine to $10 mark for quite a few, well, over a year. Pandemic happened, it dropped, and then it's been slowly kind of creeping its way up. And yeah, that brings us back to today, where here we can look at some of the fundamentals of what happened on this quarterly report in November. Okay, so let's look at what was going on, because here we can see two spikes and one dip. So in November 2020, the report, they indicated that their royalty and same-store sales were down by 9.5%. Their payout ratio was 74%. And yet the stock price went up by 7% with over a week period of a week. At that point, they had just raised their dividends by 10%, and their earnings per share had decreased by 10% as well. So when we look over here, uh, in their March 2021 report, same thing, royalty and same stores sales were down on average by 16%. Their payout ratio was 84%, and their earnings per share decreased by 17%. And yet the stock increased in price by 9%. Within a week, it went up by 9%. Brings us to their report in May, where sales again were down by 13%, payout ratio was 106%, and earnings per share were down 14%. But obviously, as you can see this time, the stock dropped by 6%. Clearly, just kind of looking basically at some of those fundamentals, the earnings per share was worse at this point, yet this is where things dropped off. There's two conclusions I can come to at this point. It's one, I think partly there's a lot of speculation in the market. I wonder if at this point there was less optimism about what was going to be happening with provinces reopening across the country versus back in March. I can't remember if things were looking a little bit more brighter, but yeah, I think that leads me to my second conclusion is that I wonder if I'm actually was kind of looking at totally the wrong stats. And maybe there is something, if I dug a little deeper into what was going on, that I might be able to kind of uncover what was causing Pizza to have some of these interesting spikes and dips. I have an investment strategy that focuses on dividends. As much as I want to pick stocks that have a high growth and that their dividends pay out on a regular basis and that there is some increases, I don't necessarily, and this extends to yourselves, don't have to know everything about every single company to a T. If you're into that, look it up. It's important to be knowledgeable about your company, but in some cases, I'd rather kind of understand their product and their service that they actually offer and kind of judge a company on that as much as like understanding, their growth potential and just are they earning a profit or not? How well are they doing? Are they good for society or not? Yeah, I feel that this is kind of almost anticlimactic because I'm as clueless as you are as kind of why investors behave the way they do. I feel that Pizza is a great stock to add to my portfolio. Again, I don't have to understand everything, but what I do understand is that they're paying a 66 cents per share forward dividend. I think there's growth, and so I'll take advantage of that growth. But then in the meantime, I'm going to take advantage of receiving those dividend payments and reinvest those dividends and buy some additional stocks into other companies. So now I'm going to show you the video I shot where I purchased some stocks using Wealthsimple Trade. It is Canada's zero commission trading platform, one of a kind. You can find a referral code down in the description where if you invest $100, you get $100 free. So here we are back into my tax-free savings account on Wealthsimple Trade. Let's go and pick up some additional Pizza shares. So what we're going to do, we're going to only buy 20 shares today. I'm going to build up this position, put over $200 towards it. So let's go through with this market buy and buy these. And what? Oh, because I didn't select. Okay. And once I select the right trading account, let's purchase these shares. And what I'm going to do with the remainder, and this is where the spreadsheet really comes into play. I'm going to take a look at my tax-free savings tracking. And here I've sorted things by unrealized gains and losses. So here I can see, right now Brookfield Renewables is negative 13%. Where putting more money into here, I'm getting my best bang for my buck. But as you may know, and I'll put a little link for the other video. I just put some money into here not too long ago, and it makes up 21%, 22% of my overall holdings, and I don't want that to balloon out of control. So I'm going to go up and basically look at the Aecon Group. I've only bought one share of those, so I think now is the time. I'm down 2.5%, so now's the time to buy 2 additional shares of Aecon if there's enough funding there, and that will kind of bring down my average cost, and then just start building up that position a bit more. So again, tax-free savings account, and let's see. Oh, this might be pushing it. Because I think I'm just might do a limit buy, and let's see if this goes through, if it will let me, if that 5% kicks in or not. Okay, so I'll just have to find out if that actually goes through or not. That's a little kind of hack to kind of get around that 5%. So we'll see. That concludes the buying portion of this video. I'm just going to go over here. Yep, there it is. Yeah, I feel very, very confident in the pizza, and can't wait to see it grow. I will input into my dashboard all these different stock changes, but here you can see just these purchases today, it's going to result in $1.21 increase to my monthly dividends. That's awesome. Want to keep that growing. And that concludes this quick little video. I hope you found that research kind of interesting. I hope it answers some questions about what you were seeing in their graphs. So if you like this kind of video, let me know. Leave a comment. I would love to kind of do deep dive into other stocks. It's beneficial for me to learn how to do that kind of analysis, as well. If it's helping you, that's even, that's the greater reward. I plan on doing a deep dive in some of the other positions that I hold. So again, just kind of reaffirm, why am I holding these? It's good to have a belief in the company. It's good to understand what they're doing. Everybody be safe, be good to one and another, and keep it in the green. Take care. Bye.